What if I told you that out of every 26,000 companies that have ever been listed on the U.S. stock market since 1926, only 86 of them produced all the net wealth? Not most of it, not the majority, all of it. Every dollar of net stock market return over the past century came from a group of companies you could fit in a single conference room. And if you're sitting there thinking you can pick 10 smart stocks and beat those odds, the math says you have a 96% chance of being wrong. But don't worry, there is a way to guarantee you own every single one of those 86 companies without guessing. And I'll show you exactly how by the end of this video. All right, let's start with the study that quietly broke the investing world. A finance professor named Hendrik Bessembinder went digging into CRSP data. That's the gold standard database of every U.S. stock going back to 1926. He tracked every single company that was ever publicly traded, delisted ones, merged ones, bankrupt ones, the ones nobody remembers anymore. And what he found was staggering. Out of roughly 26,000 stocks, the entire net wealth creation of the U.S. stock market was generated by just 4% of companies. 4%. Here's what that actually means. If you took all the gains from every winning stock and subtracted all the losses from every losing stock, the entire positive result comes from just that tiny sliver. The other 96%, they were dead weight at best, wealth destroyers at worst. More than half of all individual stocks actually lost money over their lifetime, underperformed simple treasury bills. Let that sink in for a second. If you picked a random stock from history, your odds of even beating a government bond were basically a coin flip. But wait, it gets worse. Because Bessembinder didn't just find that 4% of stocks drove all returns. He found that less than 1% accounted for half of all wealth creation. Half from less than 1%. Think about that distribution for a second. It means stock returns aren't a bell curve where most companies do okay and a few do great or terrible. They're what statisticians call massively right-skewed. Almost everything clumps near zero or negative, and a microscopic handful shoot to the stratosphere. This is the Apple problem. Apple alone has created over $2 trillion in shareholder wealth. One company. If you owned every stock in the market since 1980, you got Apple's gains automatically. But if you were picking individual stocks, the odds of Apple being in your specific 10 picks out of thousands of available names were laughably small. And this is the trap that most millennial investors fall into right now. You do your research, you read the earnings reports, you listen to the podcast, you pick your 10 favorite companies. And statistically, about 9.6 of those 10 picks will not be in the wealth-creating 4%. That's not me being pessimistic. That's just the base rate. That's what the actual historical data says. 96% of your picks are statistically expected to miss. Even worse, of your 10 picks, some will likely be net losers that drag your entire portfolio below the market average. This is why the average equity fund manager, someone whose entire career is stock selection, underperforms the index over any 15-year period. Over 20 years, about 95% of professional fund managers fail to beat the total market. These are people with Ivy League degrees, teams of analysts, Bloomberg terminals, and decades of experience. And they still can't reliably pick the 4%. But here's where it gets interesting. What if you stopped trying to pick the needle and just bought the entire haystack? This is the idea behind what's called a total stock market index fund. One fund, one purchase. You own a piece of every publicly traded company in the United States. All 4000 plus tickers. Apple, you own it. Microsoft, you own it. The next 100 bagger nobody's heard of yet, you own that too. You don't have to guess. You don't have to research. You don't have to be right about which sector will win or which CEO is the next Steve Jobs. You just own everything. And because you own everything, mathematically, you cannot miss the 4%. It's structurally guaranteed. The 86 companies that create all the wealth, they're inside your fund, automatically. Now, let's be clear about what this doesn't do. It doesn't help you beat the market. You won't get 50% returns in a year. What it does is mathematically guarantee that you get the market return. No more, no less. And here's the thing most people miss. The market return over long periods has historically averaged about 10% annually. That turns $300 a month into over $1 million over 40 years. Not by being clever, not by timing anything, not by picking winners, by owning the entire economy and letting it do what it has always done. Grow. Here's the counter-argument you're probably thinking right now. But what about the bad companies? If I own everything, don't I own the losers too? Yes, you do. But here's why that doesn't matter. The way stock returns work, your downside on any individual stock is capped at 100%. You can only lose what you put in, but your upside is infinite. There's no ceiling. A stock can go up 1,000%, 10,000%. So the one company that goes up 10,000% wipes out the 20 companies that went to zero. This is exactly how the 4% creates all the net wealth. Their gains are so enormous they overwhelm the losses from everything else combined. When you own the total market, you get this effect for free. The winners carry the losers, and the losers, they eventually get delisted and replaced by new companies that might become winners. The index self-cleans, automatically. This is the part that messes with people's egos. We want to feel smart. We want to believe we can identify the winners, but the data is unambiguous. Every study, every decade, every market, every country. Stock picking fails for the vast majority of people the vast majority of the time. Not because people are dumb, because the math of the 4% makes it almost impossible. The companies that will create all the wealth over the next 50 years, some of them haven't even been founded yet. You cannot pick them because they don't exist. But the total market index will add them automatically the day they go public. That's the blueprint. Own everything. Miss nothing. Let the 4% do the heavy lifting while you live your life. Stop trying to find the needle. Buy the haystack. If this was helpful, there's more on the channel.